Hey everyone, back again with another edition of That's Our Two Satoshis Live, where we talk about digital asset markets like we've been doing every week in written or in oral form for almost 7 years now, I guess. And today, joined by Alex Woodard, who's all the way into Los Angeles from Hawaii. One of ARCA's longest lasting digital asset analysts, have been with us almost since the beginning. And I'm Jeff Dorman, Chief Investment Officer at ARCA. So before we get started, quick disclaimer, this is not investment advice. Consult your own financial advisor, friends, firm before making any investments. But we will be talking about the markets and what's going on. So Alex, good to have you, buddy.
Thanks for having me.
All right. So as most of you know, we write a blog. It comes out on Mondays at our website, ar.ca. That's our two Satoshis, what it's called. It's getting a little bit more challenging to write about themes and narratives and events happening in the digital asset market over the last couple of weeks, just because it's been so one-sided, right? We've either been kind of moving slowly up or slowly down, and most of the attention has really been on either Bitcoin or ETH or on some form of macro narrative, whether that be the FOMC or CPI, or something related to regulatory policy, or even the upcoming election with Trump and Biden now getting involved in the crypto wars. This week, it was sort of similar in that the only real notable news was the CPI that came out on Monday of last week, which was certainly softer than expected. Followed up by the FOMC meeting on Wednesday, which was unchanged from a rate standpoint, but certainly more hawkish from a rhetoric from Powell. It was a weird reaction, though. The equity markets, fine. They loved it. They liked the softer CPI print, one of the softest we've seen certainly all year. And I think I saw somewhere that there's been 689 CPI data points since 1967, and only 31 times that core CPI, excluding shelter, was negative, and this is one of them. So certainly a really good print for the anti-inflation narrative. Equity markets liked it. Equity markets rose again close to all-time highs. Bond market liked it. It was rallying 21 basis points at the 10-year. Crypto markets either hated it or just didn't care. Big divergence between crypto and stocks and bonds. I mean, Alex, the only thing I can come up with is that, debt and equity markets tend to do pretty well in times of inactivity, largely because you're getting your coupon payments, you're getting your dividends. There's always natural money coming into this space. So all else equal, when there's nothing happening, debt and equities go up, whereas crypto is the opposite, right? All else equal, you have high inflationary pressures, you have unlocks, you have more reasons to sell than to buy. So it's almost like crypto is waiting for positive news before it can go higher, whereas equities and bonds are the opposite. They're looking for negative news before they'll go lower.
Yeah, I tend to agree with that. I don't spend a ton of time in traditional equity markets outside of like some of the crypto related ones. But yeah, it seems like there's just a continued underlying bid to the upside and a lot of names with a lot of growth trends, even if it is kind of late stage growth. You still have underlying tech growth and AI and everything that could bring. And the demand there, where crypto, it just seems like there's underlying sell pressure everywhere with constant unlocks, constant new tokens, jumping from meme coin to meme coin and trying to figure out whether or not Donald Trump coin is real or fake. Like it seems like the games we're playing have much more sell pressure than the games of traditional finance.
Yeah, and I think that's why it was so interesting to me when I put a chart in the blog that you guys can see on the website showing the 3-month performance of the Bitcoin miners, best expressed by just looking at the Valkyrie Bitcoin Miner ETF, which is WGMI, versus Bitcoin. And, if you look at this chart, since inception of WGMI, or just take a handful of miners and look back even further, Bitcoin and the mining stocks have always been incredibly highly correlated, have always moved pretty much in step. Those last 30 days, not so much. You've got WGMI up 50% while Bitcoin's down 8%. And really, this is the first major divergence that we've ever seen. And the question I had, of course, was, is this because the equity markets are just hotter than the crypto markets, right? Is this because the Bitcoin mining stocks are being viewed as tech stocks and not necessarily just as an extension of Bitcoin? Or is this because there are, just other reasons to own Bitcoin mining stocks now besides just levered Bitcoin? And what I mean by that is levered Bitcoin is the obvious answer, which is every time you have a company that has fixed costs but variable revenues, if the revenues increase and the costs are fixed, you're going to have a pretty high operating leverage, right? So Bitcoin miners, pretty simple business. If your cost of your facilities is largely fixed, but the price of Bitcoin goes higher, you'd expect the mining stocks and therefore their EPS to go, much more higher than just the increase in Bitcoin. That's obvious. That's one reason why you own the stocks. Clearly, that's not why the mining stocks are higher right now, given that Bitcoin is down 8% over the last month and the mining stocks are up 50%. So what are the other reasons that is building this euphoria to own the mining stocks?
Yeah. So there's two things. One, we've seen some outside spikes in fees. Uh, Obviously saw this around the halving where a bunch of miners were competing for that first block. Fees went ballistic. Launch of runes saw the fees go ballistic there, but really they've fallen off since then. Turns out like you need to actually have infrastructure to build these products out on runes and whatnot, and that just wasn't there before they were released in the halving block. So they've come down quite a bit. There are still spikes. Last 2 weeks ago, I think we saw a pretty large spike. That was like the second highest 24-hour fee rate compared to of the new halving era outside the halving. So that was good to see. So there are still some upside in fees.
But you and I have talked about this. I mean, you being obviously 100% dedicated to digital assets, you're seeing these spikes in real time. You're seeing the pockets of activity around ordinals and L2s. You're seeing this optionality that exists. But largely, when you look at the Bitcoin mining reports from your JP Morgans, your Morgan Stanleys, your BTIGs, your Cantors, they're not talking about this very much, though, right? So do you really think that is, to me, that's obviously upside optionality in the miners, but do you really think that is baked into the price of the stocks today?
No, I think fees have almost nothing to do with the current upside dynamics of miners, why they've outperformed. What's really driven it has just been a constant re-rating of what people are starting to consider valuable from these mining stocks. My opinion, and I think our opinion has been for a while, that the land and power contracts are where the real value is. What I mean by that is most of these miners have, like you were talking about, low fixed power costs. Power costs that are built into contracts so that they can buy low cost energy from governments and states. So that's really valuable. The other is at the core of it, these things are just data centers, right? Like you're taking stranded power, and what I mean by stranded is typically power that is bigger supply than demand. So that's why they're all in Texas, because there's a ton of sun in Texas, and Texas is pretty rural for the majority of it. But you're taking fixed stranded power and actually trying to apply some value to that, and that is Bitcoin mining. It's turned out that pretty much since there's just been constant demand for AI HPC data centers, and people are finally starting to see that Bitcoin miners are very similar in nature. There's some conversion costs, but you can buy those for much cheaper and use Bitcoin mining facilities from as hosting facilities for much cheaper than you could go and build out your own data center. So to me,
you had mentioned to me that for the most part, the Bitcoin miners were being valued at about $1 to $3 per watt that they're producing, whereas some of these HPC high-powered community data centers are what, $5 to $12 per watt. So would you say that some of this move higher in the last month is just a re-rating to that new valuation, or is it because you really are seeing transactions where some of these Bitcoin mining facilities are either actively converting and or being acquisition targets? Like what is the cause of the re-rating that we see today versus kind of what your expectations are going forward?
Yeah, so the market really recognizing this kicked off with the CoreWeave deal. I think that was announced a month ago at this point, sometime last month. And what that was $3.5 billion for 200 megawatts of hosting at some of their facilities. Hosting being CoreWeave comes with the chips and everything, so you don't have the high expense of NVIDIA chips that would typically come with being an AI data center. So that really kicked off almost the entire re-rating of the sector, specifically in cores, specifically in iron. project that we've talked about plenty of time, or a company that we've talked about plenty of times that has already been focusing on HPC AI. And it also, you start seeing transitions from other miners as well, like TeraWulf being another core beneficiary of that.
Sure. Yeah, and I think, ultimately, look, obviously the Bitcoin mining stocks have done really well. It's been a really good investment. It feels like there's a lot more room for upside as well, just given the fact that they haven't even come close to re-rating fully in terms of what the valuation could be, just from a pure data center standpoint, independent of what happens if you have the spike in Bitcoin prices. I think the other obvious answer is just that no one can really value Bitcoin itself, but it's pretty easy and straightforward to value any existing businesses that derive their success from Bitcoin. So it's just a natural derivative play. If you like Bitcoin, but you can't quantify a lot why you like it, then you just model out scenarios of where Bitcoin could go, and you buy the asset that can do the best, probability weighted in those different outcomes. So we've heard 100,000 Bitcoin being thrown around. We've heard 250,000 Bitcoin being thrown around. We've heard $1 million Bitcoin being thrown around. Again, hard to figure out what's going to happen, but you can probability weight those scenarios and then come up with a pretty easy EPS for these miners based on that. And then again, if you couple that with the optionality of these increased transaction fees plus this re-rating on the data centers, you can see why these are fairly in favor right now. My final takeaway on this would just be that it's not a bad thing, obviously, but I wouldn't say it's a good thing. You just have more of the capital that could be invested directly into crypto being siphoned away right now that you have the Bitcoin ETF and soon to be the Ethereum ETF. Plus, you have all these mining stocks. One of the problems right now in the digital asset market is just not enough direct inflows into the tokens themselves, and too much going into these indirect vehicles. So we'll see how that plays out over time here, but certainly good for Bitcoin miners, certainly good for awareness of crypto, but maybe a little bit of a detraction from what we ultimately need to get to from a direct investment standpoint.
Yeah, I tend to agree. I guess my one pushback is like this transition is incredibly profitable for these companies, and it smooths out a lot of their revenue streams into the future. So rather than mining stocks following altcoins down 95% as in a bear market, like there is an actual floor to these things now, and it's not related to Bitcoin price. Obviously, upside in Bitcoin is a flyer for these things, these companies. So it's good to still be a miner, but the CoreWeave deal, it on a kilowatt hour basis, it's way more profitable than mining. And outside of like a few case scenarios, I wrote in our Slack channel a couple days ago earlier that there's only 2 mining rigs that have ever outperformed it. And it was outperformed that kilowatt hour number from this CoreWeave deal, and it was heat of the bull market in 17 and heat of the bull market in 2021. So smoothing out those revenue, it's not even just like smoothing out those revenue streams, it's growing the revenue streams as well for these data centers. So it's really interesting to watch this transition and understanding where they're going and what the probability of getting those contracts are, understanding the value of their land and the operators that are running them. It's creating some really interesting investing opportunities here.
Sure. And with all the bull market talk that you hear about, this is being the part of a super cycle, or this is the we're out of the distressed market of 22, and now we're into this better market environment. You're not really seeing it in most places, right? We're seeing it in the Bitcoin miners. We're seeing it, maybe a little bit in Bitcoin and some majors. But I put a graph in the blog just showing the price action since March 13th, which was really the peak of the market thus far this year. And just about everything is down, double digits, if not more. Right? Bitcoin and ETH down close to 10%, Solana down close to 10%. A couple outliers like BNB that are, more or less flat. Then you have most alts that are down in your 20 to even 50% range since then. Pretty big bloodbath. There's been one major outlier though, and that is Telegram. And I think this is interesting because I think most people have probably heard of Telegram, the product. Certainly the ton token came without much fanfare, and only this year, I think now up close to 300% year to date. This is an interesting one because when we started our funds, our professional funds back in 2018, I remember a similar dynamic in that you know everything back in 2018 was a Bitcoin fork. Maybe you had a couple smart contract platforms, maybe a few random applications here and there like Augur, and I can't remember half of them. Since none of them have produced much, but there was a very random collection of tokens that you could invest in back in 2018. And then Binance Coin came along, and all of a sudden it was like, whoa, what's this? This is actually like a real company that has a token. And at the time, I remember the venture investors didn't really know what to do with this. Everybody was talking about total addressable market and all the technology and all the reasons why Bitcoin and Ethereum and 0x and all these things would be so amazing. Back then, you had Ripple and Stellar and EOS. Nobody knew what to do with BNB because it was a real company with real cash flows. And lo and behold, 5-6 years later, not only has the BNB become one of the third biggest token in the market, but also just the way it has morphed and evolved from just a cash flow revenue token of an exchange to it being a part of the gas for Binance Smart Chain and being collateral for all these different use cases. It's really shown that an actual real company in crypto can utilize a token pretty well. I was comparing Telegram to Binance in that same way, which is, real company, clearly has, plenty of users. I think last check was 900 million users or so on the app. Kind of a token that doesn't necessarily have a huge use case yet, but obviously over time, there's a lot of levers that this company could pull given the usage that Telegram has already as a messaging app. So am I wrong? Is this the next BNB? Is there something? I mean, obviously it's a higher valuation, close to 20 billion, but is there something really unique here that's driving this outperformance year to date, and especially since March 13th?
I mean, there's definitely something real here. I don't know if I love the BNB comparison. Obviously, Binance, the company, controls the users. They control the user experience. It's very easy for them to direct users over to Binance Smart Chain, their wallets, and whatnot there with their token. Telegram's in a little different of a spot. Like Telegram, the company, tried to launch a token with their massive ICO, got shut down by regulators, and now it's really just a community-driven project with the Telegram Ton Foundation and whatnot, Ton mining, and so it's not Telegram the company itself. And where I've been trying to think through is how much does that matter, right?
Yeah, I was going to say to me that's a good thing that it's not Telegram the company, that it's all these passionate millions of users that are loving the Telegram messaging app and are trying to build add-ons and mini apps into the ecosystem. Wouldn't you argue that you get more brain power from that and ultimately more value, or could you argue that a smaller group of 2 or 3 real visionary executives is the better path to creating growth?
That's really what crypto comes down to, right? Like, I can see it both ways. For me, Telegram Ton token is entirely a call option on being able to acquire those Telegram users, get them into the crypto ecosystem and the Ton ecosystem. It's worked in ways. I think there's still a lot of room for that to improve. So it's really just, was this call option worth? What is the likelihood of it succeeding? And kind of trying to figure that out, right?
I mean, these are numbers I took from you, so I assume they're accurate. That currently 300 of these mini apps that are built on Telegram right now are accessible via the App Center on Telegram, and about 300 million plus users of their 900 million have engaged in these mini apps. I mean, those seem like pretty real numbers. I don't know exactly what these games are. I know Pixel started there. You've got Fancy Battles. I know Notcoin now is sort of a fun game, but like they're 300 mini apps and 300 million plus people is not, we'll see if it works. I would argue that is pretty good indication that it is working.
Yeah, in a way. I mean, Notcoin is the kind of elephant in the room there, where they were able to generate a ton of users, but all it is pretty much farming Not token by clicking a little dot on the screen over and over again. If that's worth $1 and some change billion, like Notcoin currently is up to other people. But yeah, I mean, you're really looking for real games to be developed, real use cases outside of like trade. They have some DeFi. It's very minimal, not a lot of usage yet in the ton ecosystem. So you're really just what we're watching for is just build that ecosystem being built out, and yeah.
Well, let me ask you this. So this is just off the top of my head when I was writing last night. I was trying to come up with what are 10 business models or projects that are more impactful in crypto to date than what Telegram has done as a messaging app, right? You've got Bitcoin, Ethereum, Solana, in terms of, three real, networks that are clearly creating a ton of economic activity. You could throw Binance in there as well as both an exchange and as a smart contract platform. So that's four there. Then you've got Coinbase and Uniswap in terms of, real transaction activity happening. Then you have MetaMask in terms of wallets, Circle and Tether in terms of stable coins. I mean, what else? What else is bigger and more impactful right now besides the ones I just mentioned than Telegram? I mean, I was having a hard time thinking of what other, like if you were going to start from scratch and just say, I want to build something on top of an existing business with users and product market fit, like, why wouldn't this have a higher likelihood of success than something that starts from scratch, right? And I mentioned BNB. Binance has a token market cap of 85 billion, probably an equity market cap close to 200 billion, I would assume, something like that. Telegram has a $17 billion market cap right now. Like, it would seem that, again, independent of maybe how successful or what you think of the quality of these mini apps today, it's pretty big ecosystem and user base to tap into to eventually get to that next level of success.
Well, without a doubt, it's probably a great place to start building. Yeah, it's just I do fully agree. Like, it is a great place to build. Just want to see that start being built out to really justify $17 billion call option on their users. But that being said, it's what has more users in that space? Nothing.
Yeah, I mean, you're probably using the right word, call option, right? And I think, as you said, a $17 billion call option is not a small number. So it sounds like, I find it interesting, again, just because I'm coming from, my 20 plus years of TradFi. I'm coming from, the historical successes that we had in 18, 19, 20, and 21 that were built off of real companies versus some of the crypto native companies that sort of came and went. You seem a little more hesitant and trepidation, kind of want to see a little more traction. So, let's end on this. Like, what specifically can you see Telegram doing, or what would you want to see before this became exciting to you?
Yeah, I'd probably just say more development within their DeFi ecosystem. I think that'd probably be an interesting place to start. Seeing real traction within their applications or within their wallet apps, more usage across the board there. I'd love to see some sort of conversion numbers of how many people they're able to pull over from all the messaging apps users. I think that would be really interesting. How long they're likely to stay using crypto? Because if you have a really high conversion rate, you're going to be able to succeed one way or the other. It just takes time to build that out. So
Yeah,
to me,
go ahead.
Yeah, go ahead.
I almost look at it the other way too, which is, well, Reddit sort of tried to integrate crypto to, not great success. But if Telegram does have success, and again, $17 billion of a token is not a small number, you wonder who else is out there that is thinking something similar, that already has a couple 100 million users that can figure out a way to create their own network, turn it over to the community, and see what's built on top of it. So, not just social media companies, although those obviously, between Facebook and Twitter and Instagram and Reddit, but also, other financial sites. It'd be interesting, right? It'd be interesting to see if Telegram basically creates the blueprint on how to do this correctly, because it's no secret that these Web2 companies are looking at Web3. They just haven't seen a lot of success thus far in doing so. So, I guess in some ways I'm just rooting for Telegram to see if they can pull this off and create a repeatable process for other large companies. Because quite frankly, I think that's what crypto needs a little bit more of is existing user bases coming over rather than trying to create these user bases from scratch.
No, 100% agree with that. Yeah, I mean, that's why it's so interesting. It's just all the users.
For sure. All right. Well, we'll leave it there. Maybe we'll come back to Telegram another time, depending on if it continues to outperform the market or not. But I guess for this week, we'll end it there. So again, thank you everyone for listening. I encourage you to get on the blog, Arca's website, ar.ca. That's our two Satoshis is the blog. Alex, you can people can reach you where? What's the best way to reach you?
Twitter or Telegram, I guess. Crypto Alex 17.
Crypto Alex 17. There we go. And I'm Jeff Dorman, as always. We'll be back again next week. Appreciate everybody. And let's see if we can get a little more traction in the digital asset markets. We have more to talk about next week. Thanks, everybody. Take care.
Yes.